Most beginners fail in trading because they don't lack in intelligence, but because they lack a system. They buy because someone said it will go up, and they sell because someone on Twitter said market crash coming. Today, I'll give you a simple, beginner friendly trading system you can use from the next time you trade step by step: entry, stop loss, time frame, exit rules, everything. Before we jump into setup charts, I want you to understand one truth. A trading system must tell you four things clearly. One is like a rule meaning. What is a rule meaning? What to trade, which stock. For example, if you have to pick a stock, it cannot be a favorite stock of yours. Now, just because you're riding a Tata Motors, you should not buy a Tata Motor stock. Well, so what to trade and which stock. The next one would be when to enter, exact entry point, all those things. So just because you picked up a good stock doesn't mean that you can enter whenever you want. And then when to exit also. After your perfect entry, there has to be the plan for an exit also. And you should keep a target and stop loss. The fourth one will be the position sizing. You need to plan for your quantity which you're going to buy. So you should not put all your funds into just one trade. Well, if any system doesn't give all four answers for this, then it's incomplete. By the way, if you want finally learn trading the right way without confusion, subscribe now. I teach the stock market in a way no one else is doing right now. Well, I'll begin with the trading system. The first one would be 2050 RSI system. It's a very simple, beginner friendly trend following method. The stock selection is going to be something like only trade stocks that are trending, not sideways, not crashing. Well, it's a simple rule. The stock must be obviously above 200 EMA, and then it has to be the Nifty 50 stock, or at least from the F&O stock. Definitely avoid penny stocks. A big no to that. And then now apply after the 200 EMA, the 20 EMA and the 50 EMA comes to the picture. Like, where the price has to be on the pullback mode, either towards the 20 or the 50 EMA, and that's the time you should buy. Along with that, RSI should be around 40 to 55, not less than 40 or not greater than 55. And the candle would be a bullish candle and with volume confirmation. Well, I'm going to show you here a chart where you can see the 200-day EMA confirmation, and you can see the 20 EMA RSI around 48, and that's the bullish candle on volume, and that's your entry. Well, the stop loss is the next one. It's a very simple one. It has to be the below the swing low or below the 50 EMA, whichever is lower. And the stop loss must always be placed before you take a trade. Now, the last one, the exit strategy. There are two methods. For a beginner, you can say take profit at 1:2 risk reward, because you don't need to scratch your head for anything else. Just look at the 1:2 risk reward and exit. And if you are just learning and you become an intermediate in this, you can do a trail stop loss using the 20 EMA. Well, stop loss equals 10 means target means 20 rupees. Now, position sizing. Never risk more than 1 to 2% of your capital on any single trade. If you are having 1 lakh, then the stop loss should be 1000 rupees. And similarly, the quantity and the position sizing should be in such a way that the value of the stop loss should be less than 1 to 2000 rupees. Now I'll give some live examples. It's not exactly live, but I'm going to take you to the couple of company stocks. Well, the next section is the rules. Once again, I'm going to talk for the beginners. You must trade this system for at least 20 to 30 paper trades before using real money. You know, the paper trade, you have to sit on the live market when the market opens at 9:30, and you should exactly note down as per the plan where you would have taken the trade, and do this exercise for at least 20 or 30 trading sessions before you actually put the real money and take a trade. You should follow all the rules while taking that paper trade and ensure that it's working well. Well, the only trade is going to be the trending market, and avoid earnings day. Definitely, if there is earning, there will be a lot of volatility. So avoid that, and avoid trading before some big news happening with the company. Avoid, and stick to the rules, and do not mix emotions in executing the trade. So all this works only when you really follow it. Well, if you found this useful, make sure you subscribe. I upload simple, practical trading sessions every now and then, and it will genuinely help you grow faster. Thank you for watching. Until I see you next time, take care. Bye bye.